What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method that we use can be implemented to trade any company that is publicly traded on the U.S. stock market. Make sure you hit that like button if you enjoy the video at the end. Thanks to those who continue to view and give us a thumbs up. Really helps the channel grow. But if you have not already, make sure you hit that subscribe button and that notification bell. That way you're notified when we release our videos. Aside from the nightly and weekend videos, we do put out some bonus content from time to time, so make sure you are notified of that. Speaking of the nightly and weekend videos, they mostly focus on identifying like triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings, or what people call leap trades. So if you do want a deeper dive into exactly how we set up their charts, color coding for the different time frames, broadening formations, things of that nature, make sure to check out the bonus content on our YouTube page. There's a couple videos out there for you. And also, if you want more information about the strat, which is the base of our trading method, you can find more free information in the description of this video as well. So I do encourage you to watch the full video, because along with the triggers and targets, we give some good insight on the price action on all time frames. So with that, let's go ahead and take a look at our agenda for today. We'll go ahead and recap the price action for today, Monday, October 10th, and then we will zoom out like we always do and take a look at the week, month, quarter, and year. After that, we'll zoom back in and we will set our 4-hour markers and triggers and targets for Tuesday, October 11th. Then we'll review the triggers and targets, for the week, month, quarter, and year as well. So I'm just looking at today's price action, pretty flat, right? I got it kind of zoomed out, trying to bring in some of the 4-hour markers that we have out on the or that we like to have on the board at the open of every trading day. So right up at the top of the chart, we've got the overnight high at 45.24. We do have the previous high of day at 41.74, right? So we got that gap up today, and then another couple honorable mention levels out here are the last week's 50% level, which is this dashed purple level here, 43.62, and then the dashed green level is last month's 50% level. And we talked about last week and really pretty much every week how the 50% level is a good guide for us as far as the previous week's 50% level into what type of price action we may see for the rest of the week, especially if we test that 50% level early on in the week. If we just blow straight through it, probably going to have a red week, right? If we come to it and have a violent bounce off of it, then, we'll probably have a more of a bullish week, right? At least that's a good bounce point. But if we do like today and we come down to it and kind of move sideways, well, we've got to wait a little bit longer, right? So wasn't a whole lot to be done from a real short time frame perspective. Really, the whole day overall was pretty flat, so you had to kind of pick and choose what you were going to do. If we followed the repeatable strategy, that's getting calls at with higher lows at or above opening print, and getting puts at or below opening print, or the first traded price of the day. We can see here this level, this dashed red line with the week 11.14. That's our opening price for the week, but it's also the opening price for the day as well. So judging off of that, we did get the lower high here. We did grab a put just to see if we would get that gap close. We got the equal low and then ended up stopping out at even. The price did end up going to a higher high. However, it did still reject at opening print. And so, we dipped our toes in the water a little bit as well, again, just following the rules of the repeatable strategy. So we got a little bit of a profit to the downside. Once it started moving sideways, obviously we had our stop set. And once we went above that lower high, we stopped out. So not a whole lot there, but it was enough to make a decent profit. We had a few contracts there in the money. So once we saw that the day might be kind of tight, should we say, if you looked at the internals in the morning, especially because of the gap up, they were all in trend higher zone, but price was pushing lower, right? So conflicting internals with actual price action. A lot of times that ends up just being a sideways day. So what you really wanted to look for, well, what we wanted to get was a higher low on the 1 hour. It didn't come till pretty late in the day, but we did get a higher low. Well, it's not necessarily a higher low, but basically like a bottoming situation here at last week's 50% level, right? 43.62. We came down, we got the lower high on the 15. That was another reason why we got the puts as well. Excuse me. Not just because we were below opening print, but it was a lower high on the 15 minute. And again, we wanted to try and see what might happen with the gap close there. So we did get the push down, but once we got this kind of almost looked like a double bottom pattern, but just a bottoming pattern at the specific level that we had talked about. Now, not only is last week's 50% 43.62, but we have this 100% fib extension of the bull flag from the April low to the July high. And also the top of the range from October is right here as well. So you can see how this would be a good bounce point. So we went ahead and took our hand. Now it goes against the repeatable strategy, but this is where your nuance kind of comes in, right? You can forget that strategy, and you're, especially after we're what's this 10:30 Central, so 11:30 Eastern. We're almost halfway into the trading day, and so you got to kind of zoom out and look at situations. The situations that you're in from a wider view, right? And you can see this is, technically a higher low situation here, right? We did get a lower high here and a lower low from just this candle structure perspective. But if we're looking at major levels, we're bouncing higher than this low and this low, which couldn't even close the gap. We've got last week's 50%, October's range, the 100 fib extension of the bull flag. Even last month's 50% if we were to come down there, but it shows a lot of support. So we went ahead and there was a little bit more risk on the table, got some calls. Now it kind of popped at first and then came to a grind, but it did continue to push higher until we got this lower low here. We went ahead and exited our calls at the lower low. They were just calls for next week. We do still have our November 21st expiration calls. So, if you wanted to hold through this sideways action, you could, but it was just kind of choppy. Wasn't the best price action to continue to trade in unless you were trying to scalp something. But you can see how it was the overnight high that we rejected off of, which also comes in line with our daily downtrend line that we'd drawn, right? Let's bring, right? So we can see how this, let's get something cleaner here. Thought we had a cleaner chart. No. Anyways, we can see that we have this daily downtrend line, right? With the high, lower high, there's that downtrend line, and then high, which was this lower high to a lower high here, continues the downtrend and actually steepens the angle. So you can see we came right up to it today. May need a gap up to get over that level, but if we do, we're looking at 46.79, which is last year's 50%. We're looking at the market maker's expected move high up here. We're looking at a weekly broadening formation, this purple solid line that's going diagonally through here. So we've still got a lot of resistance here, even if we break through this initial daily downtrend line, right? That's pretty much what we had from today's price action. Not much more to speak on there. We did, like I said, left a pretty big gap and actually like a double gap situation from the previous week. And so we do want to continue to keep our eye on the downside here. We finished red on the day. So although we pushed back up from our lows, right, we still closed below where we opened. So we got to keep that in mind. Watch out for this, lower high situation here. If we go 2 down tomorrow, fill this gap, again, we're making this lower high. Don't know that we would go all the way down and make this lower low. That was a pretty big move plus a gap up. All to do in one day. I don't know that would happen, but you can see we've got this fib from the bull flag from April, right here as well. So even if we get the lower high situation, we could end up in a where we're bouncing around. We're looking at the top of the range of October here, because we came up into this. Here's one range, right? Let's make this a little bit more visual here. There we go. So this is like one range, and then we went up and started trading in another range, right? This could be considered like a look below and fail where we pop back up, but at the same time, could this be considered a look above and fail to go back into this range here? So even if we do get the push to the downside, again, I don't think it's the end of the world. Even the market makers expect that the low could be down here towards the bottom of this first range that we're talking about, right above last quarter's high, right? So even if we do get some price action to the downside, it's not going to be the end of the world, and we just got to capitalize on that. All right. Let's go ahead and zoom out a little bit more here. Let's look at the week chart, and right. So we got the 2 up, 2 down last week. Did not quite reach magnitude. Looking to make this a higher low on the week, which will be very nice. But again, we do have last year's 50% line that we've got here acting as resistance. The month's high is also up here, so even if we pierce through the 50% level of last year, we may run into more resistance here. You can see obviously resistance here. So could it be a situation where the more times you test a level, the higher chance you have to break through it, and we actually break through it, possibly. But this is a level of resistance that we've got to pay attention to. All right, so still inside on the week. There is still room to go to the downside and finish this one combo 2 up, combo 2 down strat, which would take us back down to the flip for the quarter. But even then, we're still in a position to make a higher low on the week time frame. So I just want to continue to stress that if we break down, it's not the end of the world. We're still looking pretty good, even with the week starting out with such tight trading range and essentially being red, right? Just closing slightly below where we opened. But that is the situation we're presented with. So we got to be ready to make the move on either side, right? Let's go ahead and look at the month, and we can see still inside month, but we're getting back towards that upper third of the previous month, right? We had a pretty big push to the downside. Looked like we were almost going to go 2 down on the month, right? Give us a 2 up, 2 down. Looking for a higher low situation here. Maybe fill this gap if it's bad enough. But right now we're looking a little bit better. Obviously hammered up, still red on the week though. So I'm sorry, red on the month. So still a decent amount below where we opened, but we're a lot closer. If we can get back above last year's 50%, I think we have a much better chance of turning the month green and continuing to push up. But for right now, again, just like with the week, we've got to respect what is there to the downside, right? We've got the double gap here and plenty of room to make a higher low. So we got to respect the downside. But again, if we do push down, not the end of the world, right? On the quarter's back to looking very nice. We've got let me make this bigger here. We've got the 1 combo 2 down, combo 2 up, still in force above 36.15. So again, the hurdle here is last year's 50% line. We got to get back above that. As long as we're above 36.15, we're still in the strat reversal. It's still in force, but you feel a lot more comfortable now that we've had this push up. It feels a lot more comfortable if we're above that 50% level of 2024, and we're not looking at this big wick here, right? And that plays into also what we always talk about on the year, right? The year triggered the 1, 2 up, 2 down, but it didn't reach magnitude. We're creating a higher low at this particular time, a nice green hammer. The more we can push up and close towards the top of the candle at the end of the year, the higher percentage chance we have of going 2 down, 2 up next year, which then has that target of 70.08. So again, from especially the month and higher, really nothing to fear. Even on the week, it's just really things to take note of, and still nothing to fear because we've got plenty of room to put that lower high in. So just want to keep all that in mind. Make sure we zoom out and take perspective of where we're at and what things look like from a higher time frame perspective. All right. So let's go ahead and zoom back in. Let's look at our 4-hour markers and our triggers and targets for November 11th. We can see that, let's get all the 4-hour markers on this chart here. We can see up at the top of the chart, we've got the previous high a day, 45.52. overnight high so far. Well, that's not even the overnight high. I just put it there right now just because we don't know what it'll be. We'll know in the morning when price opens. And then we have the week flip here, or the first opening price of the week. But then we have the overnight low at 44.40 and previous low of day over down here at the bottom of the chart, right? So if we get, say the overnight high and overnight low end up being where they are right now when we open, and then we open price tomorrow somewhere here in between, that's kind of ideal, right? Because that gives us the opportunity to have the most magnitude for the moves to the upside and downside. Upside obviously doesn't have a lot as much magnitude because of where we ended the day. But if we open up here and we get a push up, maybe a rejection off of the week flip and get a higher low at or above opening print, we want to get into calls. Even if we push up to overnight high and reject off of overnight high and then push back down, maybe we get the higher low at the week flip, but as long as it's at or above the opening print, we want to get into calls. And then our first target is the overnight high, second target is previous high day, right? So again, not a lot of magnitude here, so it might behoove you to maybe purchase a couple of more contracts, or if you don't purchase in the money, you're at the money, maybe you purchase in the money this time, and maybe look to get that profit to build up a little bit quicker since there's not as much magnitude. At the same time, if you step that risk up a little bit, you've got to adjust your stops and things of that nature to account for what you're trying to achieve, right? Or not necessarily adjust your stops, but you need to watch them closer and be ready to take them a little bit quicker, because just as you can clock up profits quicker, you can clock losses quicker as well. So definitely want to follow your rules, stay strict with the rules of the repeatable strategy, and if one of the rules gets broken, just get out, right? Yes, you can use this method every day, but you don't have to make money every day. If you can stop out at even or take a small loss if things go in the other direction, that's still it's essentially a win, right? You're not sitting there holding it on hopes and dreams of it bouncing back at some other mythological level or something like that, right? You can exit even or take the small loss, and you're still sitting there with cash in your account that you can use for the next setup, right? If you sit in there hoping and wishing, then you end up losing a lot of money. So don't be afraid to stop out at even or take a small loss, right? When I finally learned that years ago, that's when my portfolio started really building up, right? It's okay to take a small loss. It's okay to take a big loss every once in a while too. Don't let it kill your portfolio, but sometimes you want to take a little bit more risk. Make sure you got the right amount of cash in your account to do that, to bounce back from that type of thing if you're going to put a little bit more risk on the table. But just adjust, right? I'm going on here, but anyways, just in reverse of upside action, right? If we get higher lows at or above opening print, we want to get into calls. Same thing to the downside. If we push down and maybe bounce off of overnight low and push back up, and we get the lower high at or below opening print, we want to get into puts, targeting first the overnight low and then second previous low a day, right? Once you get to those levels, we've got to switch to our notes here and look at how things look on the 4-hour time frame, the day chart, things of that nature for our next set of triggers and targets. But for the repeatable, proven strategy, you get the opening print, the opening price level, and then you get calls at or above opening print, and you get puts at or below opening print. All right, pretty simple. Let's go ahead and move to the 4-hour chart and look at more of a full day trade type of setup, right? When we look at this, we do have the one, we talked about this in the weekend video, we have the 1 2 down, and then it triggered the 2 up on Friday. So we've got the 1 2 down combo 2 up triggered today, and it still has magnitude to go, right? The magnitude is the high of the candle to the left of the 1, which is up here at 46.99, right around last year's 50% and the market maker's expected move high for the week. So if we do get price to the upside tomorrow, right, first it will be a 2-1 2 up reversal, which does not have a lot of magnitude, but if it reaches that magnitude, then it kicks back in this 1 2 down combo 2 up, and then we're looking for this 46.99 as the magnitude for that move. Now, if we go to the downside, that triggers a 2-1 2 down, triggering at the low of the 1, and the magnitude would be the low of this 2, basically the top of the gap. Now, if we poke into that gap, Obviously, we've got last month's 50%, and the bottom of the gap has some extended targets that we can look at. And if the rug's really getting pulled, we look at this thin structure here from a 4-hour candle perspective, and we have to bring into play the 78.6 fib extension of that bull flag from April low, right? If we want to look at more of a day trade, swing trade overnight, maybe a couple of nights, let's look at this, right? Remember, we poked down into this range here on Friday, but we popped back out of it on Monday. Now, if this is just a look above and fail to come back into this range, we'd trigger a 2 up, 2 down, right? That triggers at the low of this 2, and the magnitude isn't to the bottom of this 2, which is last week's low. So we've got to look at the support levels that are going to be there, meaning last week's 50%, last month's 50%, and then the bottom of the gap. Now, if we break through all of those and have momentum or put in a lower high underneath the initial gap close, now we're looking to reach the magnitude of this move, which again is 3704. Now we go to the upside. That triggers a 2 down combo 2 up with that magnitude of that 46.99 again here, right? So right around that market maker's expected move high and last week's 50%. So it's funny. I guess it's not funny, but it's you got to take note how these levels all start to coincide. And when you break it down, you can see where the levels of support and resistance lie, right? So let's go to our notes real quick and look at the hard numbers, right? So for Tuesday, November 11th, there will be 34 trading days left in the year, and the close on Monday, November 10th is 44.96, right? So we know that, this should be green. I'm not sure I did that. All right, so we know that we opened the week at 45.06, and since we closed at 44.96, that means we're red on the week. So we know that to turn the week green, we've got to get up to that 46 or 45.06 level. To get the month to go green, we've got to get up to 49.49, right? Now the quarter and year are green, so we don't have to worry about flipping them green, but we do have to watch that if we do start to push to the downside again, we're not threatening flipping these red, right? We don't want to go full time frame continuity to the downside if you're a bull, right? Now we know the expected move for the week is plus or minus $5.66, giving us a range of 47.40 to 37.08. We're up, towards the top end of that range, but we still got some room to go. And we know we have got gaps above and gaps below, including this double gap that we left from, Monday and Friday of last week, right? So from 43.46 to 41.74, that's a pretty big gap, right? Now we went over the repeatable proven strategy for scalping, getting higher lows at or above opening print, or getting puts getting calls with higher lows at or above opening print, and getting puts with lower highs at or below opening print, right? So we've gone over that, but from a 4-hour time frame perspective, if we go to the downside, we get a 2-1-2 down, triggering at 44.57 with a magnitude of 43.46. Now, if we keep pushing, we've got an extended target of 42.84, and at that point, we start to roll into, if we get past that, we start getting into the day chart triggers and targets. So we just end with that extended target of 42.04 to the downside on the 4-hour chart. We could see a bounce at that level. Now, if we go to the upside, in the first 4-hour candle of Tuesday, we go 2-1-2 up, triggering at 45.43, and then again, we very small magnitude there, but we do have the 79. This should be 99. We do have the extended target of 46.99, which is the completion of the 1-2 down combo 2 up. All right. So to the downside, 44.57 trigger is the trigger. First target is 43.46, then 42.84. To the upside, triggers at 45.43. Magnitude is 45.52 with an extended target of 46.99. Now, if you're looking at the day chart and looking for more of a swing, if we go to the downside, that's a 2 up, 2 down, triggering at 43.46, which is the magnitude of the 4-hour move. And then we have, because the magnitude of the 2 up, 2 down on the day is so large, we want to go ahead and have some intermediate targets here. So if we trigger 43.46, our first target will be 42.37, 41.74, 39.26 on our way down to the actual magnitude of the move, which is 37.04, being last week's low. So again, I don't know that we'll do that all in one day, but if the rug's going to get pulled, we got to have our triggers and targets out there. And one of the the target, the main target we need to have is the magnitude of the strat reversal, right? So we can have our intermediate targets, but if we're really getting the rug pull, it should be no surprise that if we reach 3704, right? Now to the upside, we would have a 2 down combo 2 up, triggering at 4552. Oops, 4552 is the trigger. Now the magnitude is somewhat large in the face of the downtrend that we're in, as well as the levels of resistance that we have above us, the known levels of resistance. So the first target is going to be 46.79. That is last week's 50%. But then the magnitude of the move is at 46.99. So, anywhere between 46.79 and 46.99, don't be surprised if there's sideways action or a rejection, right? Now, if we continue to push the upside, we've got our extended target of 47.40, which is the market maker's expected move high for the week. Now, again, when dealing with the market maker's expected move high, it's not an end-all be-all. It is just a level where the market makers expect price to it's a range from which market makers expect price to stay within, right? So we won't go back to the charts for the week, month, quarter, and year. We'll just go over the numbers. On the week, we're still inside, right? So we haven't gone to the upside or downside. If we do go to the downside, that triggers a 2 up, combo 2 down at 41.74 with a magnitude of 35.97. Now, if we continue to go past that, that triggers a combo 2 up, combo 2 down with the magnitude of 34.17. And actually, because of the just continued 2 up, 2 up, 2 up, 2 up we had for multiple weeks, it creates multiple combo 2 up, combo 2 down situations. And these are all of the magnitudes for those moves, right? 35.97 is the first, 34.17, 33.18, and 31.28. Be a pretty big move if we get all the way down there, right? But we've got to have them on there because of the structure that we have to the left of us on the week chart, right? When you just got 2 up, 2 up, 2 up, you're going to have a pullback at some point. And, the market will decide how far that pullback goes. So we want to make sure that we have our levels marked out. Now, if we continue to push to the upside, that gives us a 2 down, 2 up reversal, triggering at 50.19, last week's high, with a magnitude of 51.91. Now, if we continue to push up, we've got extended targets of 53.15, 54.42, 55.46, and 56.92, right? Again, don't know that we'll come all the way up here this week, but even if we get a strong push to the upside, but we've got to have them out there in case we do. We've seen how SOXL can run, right? Now for November, again, we're still an inside month, and we've got to get all the way down to 33.98 to trigger the 2 down. Obviously, that's further away than the 50.76 that would continue the 2 up in the month. So we've just got to wait for that to resolve. We're still in the upper half of last month's price action, so that's looked at more as a positive or a bullish sign. So just got to continue to monitor this, right? Because around that 50.76 level, or a little bit before that, I should say, that 46.99, 46.79 level, that's last year's 50%. So could have a tough time punching through there and actually triggering that 2 up, right? Now, in the quarter, we talked about how we're in this 1 combo 2 down, combo 2 up because we're above 36.15 still. We've reached a couple of the targets that we had once the strat triggered. But you can see, we kind of stalled out 50.76 last week. And so we still got these extended targets out here. And the reason why we have so many intermediate targets is because not because we're like in the face of a weekly downtrend or something like that, but just because the magnitude of the move is so far, right? 36.15 to 70, that's essentially doubling, right? We've got to have some intermediate targets on the way up. And again, just because we've triggered this 1 combo 2 down, combo 2 up doesn't mean we have to reach this in 1 quarter, right? It may take multiple quarters, but it's triggered and it's still in force, so we've got to respect it and keep our eye on the target. Now the year, we talked about how we triggered the 1 2 up 2 down, and we've reversed that, creating a higher low so far, a nice green handle, and a green hammer, and looking to finish at the top of the candle for the year to give us the best chance of going 2 down 2 up in 2026, right? Because that magnitude is that 70.08 again. Once we pass 70.08, we're I think it's 74.21 is all-time high, and then we're looking at new all-time highs at that point. So there you have it. Those are the triggers and targets for the scalping all the way up through the year chart. I hope everybody has enjoyed this video. We tried to push in as much information as we could without taking up too much of your time. So we really enjoy you joining us. Again, if you enjoyed the video, just go ahead and give us a thumbs up, right? It's free. Our channel is free. We're not selling anything. We're just trying to provide as much information as possible. So a thumbs up really goes a long way. We'd love to spread our our method to as many people as possible, because we like to think that it helps to kind of simplify trading, right? For some people, trading may be easy, but for a majority of people, it's not. And so if we can make trading easier, that's what we'd love to do, right? It helps everybody in the long run. So again, thumbs up if you enjoyed the video. Make sure you're subscribed. If not, that way you are notified when we release our videos every day. And like we say at the end of each video, if you're watching this Monday night, we hope you get some good rest tonight and wake up refreshed tomorrow. If you're watching this Tuesday morning, we hope you got some good rest last night and you woke up feeling refreshed. And we look forward to being out there and trading with y'all.